This Week in Startups is brought to you by Capterra. Find the software that will help you do what you do better. Join the millions of people who use Capterra every month. To start your search today, visit capterra.com/twist. And Squarespace. Start building your website today at squarespace.com. Enter offer code TWIST at checkout to get 10% off.
We always like to start with money because people need money. Money is important from investors, as well as the knowledge and the network that they bring. And so we like to bring investors who are active and who we get great reports back from our portfolio companies, that these investors actually take the time to meet with founders and consider what they're working on and give great advice. As I like to remind people in our company, the way founders spell love is T-I-M-E, time. You got to put the time in with them. So if you're an aspiring angel investor here or a new angel investor, remember that. So let me bring up Ben Narasin, Arlan Hamilton, and Zach Coelius. Come on up. And let's give them a big round of applause for Ben, Arlan, and Zach. You can sit in any order. Does not matter. Let me get those beverages out of the way.
Like the cups?
Yeah, these are the new This Week in Startups cups that I had made in the Greek diner tradition. And what do they say?
Do the work.
That's it. Just do the work. Life is that simple. Do the work. All right, so let's talk about the work. Ben, you've invested in 80 companies, and 50% of them hit a Series A conversion. You got 3 unicorns under your belt. That's pretty amazing. And you just started at NEA as a venture partner. What does it mean to be a venture partner versus being a general partner at a venture firm? And why did you choose to join the largest? Is it the largest venture firm in the world?
Yeah, if you don't count SoftBank, which even SoftBank doesn't count.
No, SoftBank is like a growth fund.
Yeah.
It's a new entity. We don't even know what to call a $100 billion sovereign wealth.
Well, only 93. They sort of missed the target. So
They missed the target by $7 billion?
Yeah.
Well, the Uber shares will go up that amount, so they'll easily be there.
They're doing great stuff, by the way. They backed a couple of my founders.
They have. SoftBank has.
Well, let me rephrase that. I think they backed one and they've met with a couple, but that was me as a seed investor. So it was intriguing to watch Masa meet with companies that were still in the seed phase when he's got hundreds of millions at a minimum.
Masa is meeting or has met with seed stage companies in America, even though he's trying to put $100 billion to work. That's fascinating to me.
Yeah.
I did not know that.
One that was still in seed, one that was a Series C, and the other one I think was probably post-Series A. I was impressed because he's looking at things across a wide array of function sets and just opportunities. But interesting way to try to find a way to put $100 billion-ish to work. Okay,
so why NEA, and what's the difference between a venture partner and a general partner for those people in the audience who may not know?
Sure.
And so why did you choose this now?
So the why NEA is easy. You know, I was a seed investor for a decade, and I took more companies to NEA than to any other firm. Because after about a year and getting to know what ended up being about 300 different VCs, individual partners at the sort of top 15 firms, what I realized is every venture firm has its own DNA. And if you fit that DNA, you survive, and if you don't, you're expelled. So if you meet 2 partners from one firm and you like them both, you're probably going to like all of them. If you meet one jerk, it's highly likely you're going to meet a whole bunch of jerks. And I really liked the DNA of NEA because it was a strong commitment to supporting the entrepreneur through difficult times, even to the point of irrationality. And I loved that. And I thought that was what I wanted for my entrepreneurs who are often first-timers. So this has been a very short journey for me to make the decision. I mean, I've been talking to them and trying to find a way to be involved with NEA for only about 9.5 years. So it was lickety split.
Venture partner versus GP.
Venture partner versus VP, for those of you that think about this. So the general partners are usually the people that are the most senior in the organization and in many ways run the firm. Then there's the partners, which are one level below that. Then there's all kinds of titles for principals, associates. A venture partner is sort of this tangential title, which actually means different things at different firms. And it's often used in at least the NEA setting and others to bring in people that are more seasoned and senior than might be normal for not having a traditional partner title, but giving them a lot more freedom. So I can do my own deals, but I also partner with people inside the organization. And, you know, sort of a key point as a close on this, you know, I've always been an ecosystem player. I want my entrepreneurs to find the best investors in the world. I happen to now work with a very nice concentration of those best investors. So, you know, while I can do my own deals, I will often attach myself to somebody else, depending on the category, to make sure that I've got the right people around the table to work on it.
Awesome. So Arlan, you're the founder and managing partner of Backstage Capital. and that's a $2.5 million seed fund. You've done 50 investments, and exclusively in underrepresented founders, or are you also opportunistic?
That's two different questions.
Yeah, take them
I am
either way.
opportunistic,
Okay.
and it's almost exclusively underrepresented, underestimated founders. We do have about 2%, I guess you could say, that does not fall into that category. We like to give back to the white male community every once in a while.
Well, as the official spokesman of the the official spokesman of the dwindling white patriarchy, we thank you.
It's been a good run.
Well, yeah. So
you are the whitest guy in this room, I think.
I am pretty pal. Yeah, for sure. Did you deploy the whole $2.5 million? When did you raise that? It was pretty quick, it seemed. You got that $2.5 million raised, and
oh, I wish it were quick.
Okay.
No. So I'm not agreeing or disagreeing to that number, by the way.
Oh, okay.
We don't disclose the number, but
okay.
No, it's so because our fund is a smaller fund. We are able to deploy as we raise, and so it's been brick by brick. So I can't say it was pretty fast, but it has been I would say a fast, quote unquote, like rise that we've had because we started from scratch a little over 2 years ago.
And you have zero background in venture capital, or did you work at a venture capital firm before this?
Zero, absolutely.
How did you get the inspiration, chutzpah, and drive to do this? What was the moment you said, I need to start my own firm?
It was a few years ago when I knocked on every door that I could in Silicon Valley, figuratively and not, and was going around talking to people about this idea that I had and this thesis I had about the fact that that I thought you could aim for outsized returns while also making impact, and we've talked about that too.
Yeah.
So, but I was, floating that idea around 3-4 years ago from, remotely from Texas, and it was getting a lot of pats on the head. This is a good nonprofit. This is interesting, but come back when reality sets in. I had someone actually laugh at me on the phone once and say I would never make it happen. So he follows me on Twitter, so we'll see. And I started seeing two things. One was like there's this disparity in how and the amount of capital that goes to anyone who's not like a strapping white male or a nerdy white male, however you want to put that. And it's just true. It's not.
Ben, thanks you for that caveat.
Yeah, I mean,
nerds are always happy to be funded.
By
the way, success is the best revenge anyway. So kill it and we're all good.
Yeah, thank you. So I saw that, and I just saw, wow, that's an interesting opportunity. As a gay black woman, and that's disappointing, but it's also an interesting opportunity.
Right.
At the same time, I had no money of my own. And I thought the way to do this is to get some like-minded people together, or convince them of this, and get that money into the hands of people who can take it the furthest.
And then you moved here. You're based here now, or
I'm based in Los Angeles.
Based in Los Angeles. And how many deals have you done to date?
As of last Friday, 55.
55 deals. Average check size about 50K, 100K.
Yeah, exactly, yes.
And your background, you went to Stanford for your MBA, or?
Yeah, kind of got bored with it, so I said bye. No, I did not go to Stanford. I didn't go to college. I graduated high school. I was considered gifted all through that, but I was also living in a house where my mother was just a wonderful, it still is, wonderful person, but we spent half of our time with no electricity, and I just didn't think I didn't understand how I could possibly go off to college while my family was back dealing with that. And, scholarships or not, that sort of emotional toll was something that I thought about. So I didn't go to college, but I've always been really self-motivated. Started my first company in the 3rd grade. I was the candy lady selling candy to kids at a discount to 7-Eleven, but making a profit from Costco, Sam's, and kind of always had that in mind. So I got my education on the streets, Jason.
Yeah. Wow. That's pretty amazing. I think that deserves a big round of applause. I love the fact that, the reason I ask this question is, I know you didn't go to Harvard or Stanford, neither did I, and just the pure hustle I really appreciate. And, the fact that you actually made this materialize out of nothing. And, it's, very easy to get in Twitter wars and for people to, fight over things and call each other names and debate things. And there's a whole nother level of respect for just materializing funds and making it happen and getting 55 investments done. I just think it's tremendous what you've done already.
Thank you.
And I think I mean, to say you have a bright future is an understatement. Hey, everybody, let me take a moment to thank our friends at Capterra for supporting the podcast. Yes, Capterra helps you find the software solution that you need for your business. That's right. Whether you need help building a website, customer service, project management, maybe you want to track applicants or figure out email marketing, the easy-to-use website, Capterra, allows you to go through 400 different categories, more than 400 now, of software to choose from. Thousands of ratings and reviews from actual software users. It's sort of like Yelp, but for software and business services. Millions of people use it every month, and you use Capterra absolutely free. There is no obligation. You don't need to register. It's a free resource to help you make the right software decision. Okay, so go ahead. Here's your call to action, capterra.com/twist, capterra.com/twist. Find the software that will help you do what you do better. That's right. Find the software that will help you do what you do better at capterra.com/twist. Okay, let's get back to this amazing episode. And Zach Coelius, you've been on the program. You have one of the most active and best syndicates. You did the largest exit to date of a syndicate, which was the $1 billion exit of Cruise. I think that was a 10, 20Xer or something for the investors in that, which is pretty amazing if it was between 10 and 20X people. The time between the investment and the exit was 18 months, 24 months, 30?
7.
7 months.
Sweet.
Dumb luck.
Incredible.
Pure, unadulterated dumb luck. Thank you.
Well, you know what they say about, like, what do they say about luck?
The harder you work, the luckier you get.
Yeah, exactly. You can actually increase the luck by being around the right people. So tell us how things have evolved on AngelList and for you as a syndicate, because I think you started maybe just a year after I did on the syndicates or about the same time, but things have changed. Now there's funds, and I know that a bunch of people after the book came out emailed me and said, oh, we tried to join AngelList as a new angel, but they're not accepting angels into syndicates. You have to go into a fund. You have to join a fund first before you do individual deals. Did you do a fund on AngelList?
Yes, I have.
How does that work?
I have a fund now. It's $1 million fund. We write small checks off of that, $25K to $100K checks into early stage companies. The syndicate is still the majority of the capital that comes off of my investments. Checks there are usually sort of like 300 to $1 million, give or take. But I mean, AngelList has grown just unbelievably quickly. So when I first started, we were struggling to get $100K into a company. So when we did Cruise, we put $100K into Cruise because that was probably the most we thought we could get. So it's just the growth there has been pretty amazing. And the quality of the deals has really gone up. When we first started investing on AngelList, it was a dirty word. I mean, it was like, oh my God, you're going to put this deal on AngelList? And now, I've invested in the last, year with NEA, Narasin, Greylock, Founders Fund, Spark. I mean, basically all the best VC firms on AngelList, so it's pretty cool.
Have you moved downstream and are doing more established Series A, Series B type companies? I think I noticed that the companies are becoming more codified, solidified, revenue-generating, stable companies. What's the average life stage of the company you're investing in?
I tend to like to invest once a company is kind of figured out. I like that first sort of smoke of product market fit, like that first bit of like, oh my God, I think these guys folks have figured it out, is where I like to get involved. I'm not really an idea investor. I like to see something actually happening, but I like to get there before the old, slow, dumb VCs. Some of those funds can move very, very slowly. But yeah, so then, that's where I like to first engage and start investing. But now we co-led the HelloSign Series B with Foundry Fund, which was cool. It was a bigger check.
How big was that check? About?
My port, it was a $16 million round, and I took 4 of that. So
that's with 99 investors, you did $4 million. So the average check size was 40?
So that didn't come off AngelList. I have an LP that wrote that check.
So now you've courted LPs who will give you money to do one-offs. So your reputation now is so good that LPs will give you the money to do a big deal like that.
No. That deal was so good, it was easy for them to do the deal. I was just ancillary to the deal. HelloSign is an amazing company.
Have you introduced this LP to Arlan yet? Because she has some deals that are about to hit this range.
I like that.
You like it? Okay, good. So let's get that done. Arlan, what stage are you looking at? Zach is looking for those first couple of puffs of smoke from the fire. Are you looking at startups when they're building the fire, before they've lit the match? When are you looking?
It has evolved over the past couple of years because of our deal flow and because of what we're able to invest in. So it started with a lot of pre-seed. A lot of times we were the first check in. We called ourselves for a long time the Friends and Family Fund, because a lot of people that we're talking about are not necessarily going to have that first 25K, that easy, quote unquote, round to just even get started. So we started there. A lot of those were really good decisions. And then now as we progress, we definitely don't want to move too far away from that, but we're able to also get into some really competitive deals as well.
And let's talk candidly.
Oh yes, please.
It's kind of our speciality
Yes.
on Twitter and podcast. You and I have very candid discussions
Sure.
about topics. People marginalize the fund as an impact fund. How do you counter that, criticism or observation that some people have that this is an impact fund, and therefore that means it's a weaker fund, or it's not a marauding capitalist fund based just on performance? How do you manage that? Or how do you react to it? Because you have had people say that, you told me.
Yes, and
including the person who laughed at you.
Oh yeah, he didn't even get to the impact part. He just said I would never be able to do it. In the past, I've kind of shunned that terminology. It really, because it was so associated with nonprofit, like you're doing a great job, warm and fuzzies, and it's just not how I think. But I don't mind today if you call us an impact fund. We are making an impact. It's impossible to deny that. When Black women come up to me now and say they started companies because they heard about us, that is impactful.
Yeah.
And it is life-changing in some situations. So I'm no longer saying you can't call us that. I'm just saying that if someone's idea of impact to them means really low profit, we are challenging that notion. I'm saying you can do both at once, not just a double bottom line. You can do good by doing well. I'm saying you can do obnoxiously well by doing good.
Right.
And that's why I'm so obnoxious on Twitter.
Yeah.
Because
it's worked for me.
Well, yeah, and can I make a point about?
Yeah.
So there's a lot. So there's a lot of ego in venture capital.
Yeah.
And I'm gonna match it.
Right.
Personally, I like to be to myself, but I think this is a bigger thing, right?
Yeah. Ben, when you look at the hit rate you've had, 50% of your early investments making it to Series A, when you look back on it, what do you think were the reasons? Was it that you were just an amazing picker, or that you waited for certain signals of stability that you knew the venture community would also respond to, or was it the mentoring where you knew that the founders would listen to your advice to make them Series A ready, or some combination of these things?
So I think the first 2 points are valid. I think the third point is a good lesson for anybody that goes into investing to understand is an enormous mistake. When you need to be involved, you've made a mistake already. My best entrepreneurs have always been the same. I funded Zach. I was his very first check. My best entrepreneurs are killing it, and they enjoy and benefit from the time I get to spend with them, and they usually find some value to take away. But I did at some points think, oh yeah, I know that this guy can do this and that, or this gal can do this and that, but they need this one thing, and I can give them that. That was a huge mistake to make, and the first failure I ever had came from it. It took about 3 years. All this data is based on my 10 years as a seed investor. Funded 80 companies, a little more than half of them raised Series A and beyond, from tier 1 firms and one IPO and a bunch of exits. So it took 3 years before the first company I funded failed. And it was definitely an entrepreneur that didn't just enjoy having me there and benefit from my quote-unquote wisdom, which basically is just 25 years of making mistakes as an entrepreneur. I was dumb, so you can be smart. It was that they needed me around. And that was an unsurvivable problem because it wasn't about me. It was about the missing components in this entrepreneur that they weren't going to grow into. I did talk to a friend of mine. It actually, you and I talked about this once, but I talked to another friend, and I was like, I'm really confused. 3 years before a failure when I'm investing in PowerPoint slides, which is what I did as a seed investor. Greg Duffy came with Dropcam as an idea on a piece of paper he'd written out, and I was like, I like this idea, and we spent a couple meetings together, and I got there. Like, how can that be that I have so little failure rate? I think I lost 6% of invested capital over the last decade. I was like, I'm obviously making some mistakes here. Like, what am I doing wrong? I should be seeing more failure. And he made a point to me. He said, I think you just, this are his words, not mine. I'm not trying to blow my own horn here. He said, I think you just invest in yourself. Like, what do you mean? He said, well, you are a tireless fighter that will never give up, and you find other entrepreneurs that are tenacious and will never give up either. And because of that, the likelihood that they will fail is lower because they will not allow themselves to. And it's interesting to watch how, I remember I had an entrepreneur that I funded, and they blew through all the money in 6 months, and I was like, oh, that's a bummer. A little faster than I expected. I guess this one's going away. And he worked and got his team to work without pay for another 6 months before they pulled out and actually got trajectory. Right. I mean, he just refused to die, and he refused to let his team find a way to die, and he found ways for them to survive, and he found them other opportunities for income. So, you know, part of it is, I'll simplify it. I need 5 things to make an investment. I say this all the time. I need people, a great idea, and a huge market if it works. The people are incredibly important. I have realized that if you invest in awesome people with a mediocre idea, with a not so great market, and then hope they figure it out later, that's a very painful way to lose money because it almost never works for them to pivot into something else. Yes, Twitter worked. And then I've run out of pivots that I care about because that's really the only one I know over the last decade. So all those other 999,000.
Were these people also serial entrepreneurs? Where they
almost never.
A lot of them were first-time entrepreneurs.
Oh yeah, I have a huge weakness for the first-time entrepreneur. And I started off as an entrepreneur when I was 12, and I always imagined I would be able to help other kids that wanted to figure it out. There's certainly some. Renault was on his second company when he started Lending Club, and a few others. Zach had a background as an entrepreneur, but more in sort of like, you know, redoing homes and sort of classic bootstrappy, you know, I'm doing this as a personal income maker. But most of my entrepreneurs are first-timers, which brings interesting complexities, I will tell you, because venture folks don't always have the level of comfort they think they do with first-time entrepreneurs because they
say they do, but
the learning
what a
curve is
VC
different.
says and what they actually do are very different.
Well, you made a phenomenal point before we walked up, which is to an entrepreneur spells love, T-I-M-E.
Yeah.
You know, what I've noticed as a seed investor is that most firms, when they move into seed investing, don't understand that point. They think giving the entrepreneur money is what buys them access. And I'm firmly committed to the reality that the money is meaningless. Yes, you need it. And when you want it really badly, and you care at that moment. But a year later, when you succeed, you do not remember it. You remember whether I or any other investor helped along the way. Yeah. And most VCs are not well acquainted with that reality, or they have a reality of their own, which makes it hard for them to spend that kind of time.
Yes, Squarespace. I love Squarespace. We use it for Launch Festival Sydney, Angel the Book, Angel Podcast. We love Squarespace here at This Week in Startups. You can turn your cool idea into a new website and showcase your work, blog, publish content, sell products and services of all kinds, promote physical or online businesses, announce upcoming events or a special project like launchfestivalsydney.com, which we're doing next June. We'll be in Sydney for Launch Festival, and we built a Squarespace site in just a couple of minutes. Beautiful templates created by world-class designers, powerful e-commerce functionality that lets you sell anything you want online. Everything is optimized for mobile right out of the box. So when you pull up a website like launchfestivalsydney.com, you'll see it looks great on your iPhone, it looks great on your iPad and your desktop. Yes, you can buy domains and choose from over 200 plus extensions, analytics to help you grow your business in real time, built-in search engine optimization, free and secure hosting, and there's nothing to patch or upgrade ever. 24/7 award-winning customer support. So here is your call to action. Go to squarespace.com for a free trial. And when you're ready to launch, use the offer code TWIST to save 10% off your first purchase of a website or a domain. That's right. Use the promo code TWIST to save 10% off your first purchase of a website or domain. Just go to squarespace.com. Arlan, what have you learned in these first 55 investments? If you could go back in time and talk to yourself, you know, at investment number 1, what would you whisper in your own ear and say, don't do this, do more of that? And Zach, you're going to do that same question next, but I did Arlan first because she's better on her feet.
Poor Zach.
Just wanted to give you a little time, Zach.
Sorry. So I think since and it's weird to hear 55. I just heard it for the first time. That's crazy.
You're prolific now, by the way.
Yeah, cool.
Congratulations.
Cool. So I think the way that we've sort of evolved has been like authentic and organic. So I don't know if I would change so much the way we made decisions. I think it would be more practical things that I would tell myself, which would be about the amounts that we put into each deal. There was a lot of just figuring it out at the beginning, where like not knowing how much we're going to have, and I think even more traditional fund managers have that issue when they're raising because they don't necessarily know how, or like micro VCs particularly, don't necessarily know how much they're going to have when they have their final close, and it's about that. So a lot of those things we're learning trial by fire.
Yeah,
and
bankroll management.
Yeah, and
Poker, we call it, right, Zach? Do you play poker, by the way?
I don't, but I probably
we
could
all
learn.
play poker. You need to learn.
Yeah.
You'd be a great poker player.
Yeah, I hear there's a lot of deals that happen in these
you gotta have
poker
like a
games.
Yeah.
Yep.
Hold on to your money, Jason.
Exactly.
Yeah,
Zach's actually hosts a poker game, and he is a very good player.
Okay, give me a week.
Yeah. Just get Zynga Poker. You'll learn everything you need to know. Zach, what have you, if you could go whisper in your ear, how many deals have you done now? 30?
30-something now, yeah.
Yeah.
I don't know. I was thinking about that question. I don't think I have a great answer for that. I'm kind of learning as I go. I like to say I'm a washed-up entrepreneur, but I washed up on a beach now, and I look out at all the entrepreneurs who are out in the storms, and I remember what it was like out there. And I'm
You made it to the new world by getting knocked unconscious and waking up on a beach. It's being self-aware.
It's pretty amazing.
It's a pretty good gift. I kind of feel like I hit my home run by getting hit by the ball 4 times and just made it around the bases. Yeah.
Yeah, it's like
a great batting percentage.
God bless dumb luck. But no, I think like what Ben said really. So Ben was one of my first investors, and I learned at Ben's NEA how to be a cool investor, because I had some shitty investors, and then I had people like Ben.
Describe a shitty investor. What makes for a bad investor that you're just like, I wish I had never taken this person's money?
So we have this guy. I won't name him, but I hate him.
You might want to throw out his initials just in case anybody hears.
No, I don't really. So he begged me to invest in our seed round, which Ben invested in. Ben even knows who this is, and he gave us like a $25K note, so on a $1 million round. But he heard the Reid Hoffman and the Google Analytics founders and a whole bunch of other people were investing. And as soon as he heard that, he was like, "Oh, I got to be in this round." And then
a real considered decision on his part.
Yeah, it's pure social proof. It's all good. So he invested $25K on $1 million, $2 million total in capital. Then Lehman crashed, and he started freaking out. And he'd call every week and always showing up and really just and he's now a successful venture investor. He's got a fund. He's famous. He got all freaky.
Over 25K.
25K. So then basically, Lehman crashed, capital markets go to zero, cash balance is going like this. We basically jumped into this thing called real-time bidding, which underlying technology for advertising. It was an advertising company. And we got there when there was 20 million impressions a day transacted globally via RTB. Now there's 200 billion. So imagine that growth curve. I mean, we were on that growth curve, but capital markets are at zero, cash balance is going down. And basically we got to the point where on April 1st, we owed Google $250,000. We owed ourselves and a bunch of other people money, and we had $5,000 left in the bank. And this guy, at this point, he went from being worried to being fucking crazy.
The good news is Google loves a great April 1st joke.
Yeah, they were real excited about that.
They were super excited.
So we were basically broke. So then, make a really long story short, I managed to get a VC fund to give us a really shitty term sheet, and I managed to give us a $500K loan to pay Google and stay in business while we negotiate the term sheet. And they do that, and he calls this note. So his $25K note, he calls me up, he's like, "My note's due, pay me." And I was like, "Hold on, I got $2 million that I owe. If I pay you, I got to pay everyone else, which bankrupts the company. And I'm negotiating a term sheet, which will enable us to stay alive. But you just called your $25K note." And it was just all of a sudden, there was peace. I think angels sung in that moment because I just was so calm. I was like, this is awesome.
There's a great scene in Mean Streets where, some guy owes a guy money, and he says to the other guy, that's the best $3,000 you ever spent. You never have to see that guy again because he owes you the money. He's avoiding you. You just paid $3,000. You never have to see him again. It's great.
Yeah.
So now you did you buy him out?
Yeah. We basically I told him to go fuck himself. We managed to renegotiate the term sheet, and then immediately bought him out. Yeah.
And that kind of stuff. This is what I think
happens all the time. All the time.
It happens, and that kind of stuff travels. Entrepreneurs talk about stuff like that. And so
I've killed multiple deals for that guy. Multiple deals. Right. Killed him. Dead. Like he basically because he references, they go around.
References go around big
Fast.
time. Big time.
Yeah.
And
that's the thing about Silicon Valley, I think is my favorite thing about Silicon Valley, is you never know in this room who Mark Zuckerberg is going to be, but there might be someone in this room who's going to be Mark Zuckerberg.
Yeah.
And so you don't want to piss off the little people because you never know when they're going to turn into Mark Zuckerberg and they're going to be able to get you killed. So like, you got to be nice to everybody. So it's cool. It's like, Valley is about being nice to people because you never know who can get you killed.
Just never underestimating anybody is the way I like to sort of phrase it. Ben, what's your outlook for the market? We have, and I delved into this a bit with Chamath, so I think it's a good question for you since you've watched multiple cycles as both a founder and as an investor. When you look at 23,000 Dow, when you look at these large companies staying private for very long periods of time, although Uber's committed to going public by 2019 and Airbnb is probably going to go out.
You hope.
Well, yeah, I mean, it would be great for everybody. I think it'd be great for the industry. We talked yesterday with Chamath, and he talked about, hey, people need to put on their big boy and girl pants and get these companies public, and he's doing IPO to basically create a vehicle for people if they want to go public to just do it within 90 days without having to go to bankers, and the money's just sitting there. What's your outlook? What percentage of your net worth is in cash versus stocks right now, and how are you playing this overall market with 3 years of Trump left and us hitting these all-time records and these all-time large rounds and opportunity in a way, right? It's a lot of conflicting signal coming in.
Yeah.
How do you make sense of it all, or do you even try to?
I don't. They're great companies created every year. My job is to find them. I need to find entrepreneurs that make me say, wow. I can explicitly answer how my own personal asset allocation
let's do it. Yeah.
I have two types of assets in my personal portfolio as Ben Narasin, the human being. I have the seed investments I've made personally over the last decade, which have matured at different levels, and I have cash in banks. That's it. Actually, 3 weeks ago, before I joined NEA, I went to a friend that's a really smart PE guy, and I said, help me buy some stuff that earns dividends, and I traded a couple stocks. But it's not, you can only, focus is the most powerful weapon any entrepreneur in the world can have. The heat of the sun will give us a tan or might burn you. But you concentrate the heat of the sun into a dot this big, and you can burn a hole through anything in the world. Right? And so the way I think about it is I can't intellectually distract myself from anything other than what I want to do. And what I want to do is find phenomenal entrepreneurs. And so I'll give you an example of this. I used to be a very active option trader. I used to write naked options and then earn the premiums on it because about 75% of options expire worthless. It's a very profitable thing to do as long as you have a tolerance for some very painful swings when it goes against you because you have unlimited loss potential. And I had joined a firm, and I was running the seed practice, and I had these options outstanding from my prior life, and the market started to go all wonky, but I had a meeting scheduled with an entrepreneur I wanted to meet. And so I didn't do anything about that, and I lost a lot of money, so I didn't have to reschedule that meeting. And it was just a reminder to me, you do what you do. You pick the thing you're going to do, and you focus on that. If I can't have the focus I request my entrepreneurs have, by the way, if they don't have focus, it's unlikely I'm going to fund them, then I'm not living my own lesson. And so I don't, the other thing is you look back in time, I started a company as an entrepreneur. I was an entrepreneur for 25 years, from 12 to 37. I started a company, our first trade show, we made menswear, was on Black Monday. I mean, I'm driving to a trade show with a room, a car full of samples.
People are jumping out windows on Wall Street.
Yeah, what am I doing? I should just give up now.
Literal suicides, I think.
Oh, yeah, it was terrible. It was
I'm not
40%
light of it.
down.
Literally people killed themselves.
And I had just come out of business school, and I'm thinking, this is the worst thing in my entire lifetime. I'm going to fail. But you know what happened? That market destroyed retail, and I was selling into retail. When retail is fat and happy, they don't need any new friends. When retail's in trouble, they desperately need new friends. And so I was able to find a niche and sell into it and live through that curve. So you got to sort of look past it. I want to do some more research on this. There's 2 countries which have had like a 26-year run of positive economic outcomes, and they're not China. And I was like, wow, that's interesting. Let me think about that. Maybe we're in a 10-year bull. And Paul and I were having lunch talking about this topic. He's like, we're a 10-year bull. It could be a top, et cetera, et cetera. I'm like, maybe.
We're halfway there.
Don't have an opinion. Or maybe it's the 10 years out of 20 because the world has changed dramatically.
Right.
It's changed dramatically with larger private
it's also
companies.
changed dramatically for American companies, which now get the majority of their revenue internationally, not domestically, which is a new trend. Arlan, have you considered doing a syndicate? Or do you have one? And then what's next for you? Do you think you can 4x the fund and do a $10 million fund next? Do you need to have this portfolio, have a couple of winners come out of it first? How do you manifest the next, fund and/or vehicle?
Yes. Answer to the first part is that I am the first black woman to have an AngelList syndicate. I was 2 years ago. It has about 150,000 backing it. The second half of that answer is that I haven't had the experience that you guys have had with AngelList. My experience has had a lot more friction to anything that I offered them or proposed to them, and that's just the truth.
You're a little earlier stage than most AngelList investments.
Yeah, but not everything I do is early stage. There's a lot of offline things that I do that involve other situations, and it was hard. So I don't know. I'll have to kind of look at that again. The second part of that, though, is that right now, the number one thing that I think about and work on is what Backstage 2.0 looks like. And we have somewhere around the 50 mark, we started getting inbound institutional interest.
Oh, great.
And I think that Backstage can be a $100 million fund in a few years. I think I have no doubt that it could be if we want to go in that direction. And I think the next step for us is a significantly larger fund 3 so that we can go towards that path. I think there's a lot that we need to still do to support our current portfolio and build that out more. So I'm looking at some initiatives for that. And I also think that Backstage can be more than just venture. I think that there are some other places we can make an impact. And even if that means reinventing some sort of, finding a place for ourselves and building that for ourselves.
So an incubator or accelerator or something like that? Or?
Something like that, but maybe even something that we don't already know exists.
Got it.
Yes.
I like it. I think, what my advice would be is because I think AngelList has gotten out of the business of being the first check because it was very disheartening, I think, for a lot of early investors to invest in things pre-launch. And it felt like AngelList was becoming the funding of last resort as opposed to maybe signaling higher quality deals. So I think that they don't want to write the first check before the person has the product in market. You should do a syndicate just around, we're only going to do deals where we are the last 1/3 of the deal. And it's going to be our opportunity fund of just things that are more sure bets further in their lifespan. So like the top 10% of your deal flow goes towards that.
With all respect, I don't have any interest in working with AngelList.
Okay, cool. Fair enough. Well, I don't work with them anymore either. So
I just don't have.
But that was just really economics.
I tried for 2 years. It's just, I'm not interested.
Huh. Interesting. Was it because you were a black woman, you think?
The last conversation I had with someone there, they told me that if I thought they had a race problem, that was my problem, not theirs. So I don't know.
Huh. That's interesting.
Just telling the truth.
Huh. That's,
Merry Christmas, everyone.
yeah. Well,
Right. And I will say I have never talked to Naval, so I don't know his position, and I really respect Ryan Hoover. But there are other people there that
I think it's something we need to have a sit because I've always thought that they were kind of the good guys in the ecosystem looking to sort of build a team of rebels. And I put you on the rebel squad, which is why we vibe. And I think you're like an asset to be on the rebel squadron.
Like, I agree. Thank you very much.
I would send you to get the Death Star plans for sure. Like you're like Rogue One.
I'm assuming you're part of Star Wars. Is that?
It's a Star Wars.
Ouch,
Okay.
you got
Really.
How do you not know?
We're getting really geeky. All right, we'll take 2 questions from the audience. Lightning round. This has to be a concise question. You have to run to the microphone, so you have to be motivated. Look at that. Got the running shoes on. I like it. Concise question, please, and the next person can line up too if they want to.
Thank you very much, guys. This is a question for Zach. How do you determine, you said you invest in companies by determining the first smoke of a product market fit. How do you do that? Is it you're looking at CAC numbers, or you're looking at their website or intuition, et cetera?
So I generally invest almost everything in enterprise companies. So people who service businesses in some form or fashion. And generally, you can't get an enterprise customer until you have a product that sort of works in some way, shape, or form. But I sort of subscribe to the Michael Seibel school of product market fit, which is like, you really want to have a customer whose hair is literally on fire, burning, pain, just they have a problem that they need solved. You can call them up at 9 o'clock at night while they're putting their kid to bed, and they can be like, hey kid, shut up, I got to take this call. Like, you want somebody who really needs their problem solved, and where you can hand them a brick, a physical brick, and be like, here, this is my product for putting out your hair that's on fire, and they'll pay you for that brick because their hair is on fire and they need that problem solved. And so you can sell them a piece of shit that's not designed for their problem, but if it actually solves their problem, they're going to give you money for it. I love that. I've been in that spot.
I'm super confused by this metaphor, but I kind of like it. But
Are they rubbing their head with the
when you play poker,
basically what you're saying is if the product, if I smash the brick on my head, it will put the fire out even if I get a concussion.
Yes.
But they're so good at selling.
My favorite thing about Jason when you play poker is he gets confused when you play poker as well. So he take his money, just
Absolutely. I'm like, I don't understand it. You're putting all your chips in the middle. Does that mean you have the nuts?
Exactly.
Or
just
are you bluffing?
He gets confused.
I don't know. I have to know.
Take his money. But anyway,
I have to know.
Yes.
I call.
The hair is on fire, and a brick is a terrible tool for putting out the hair on fire problem, but yet it works, and they'll pay you to buy it. So, piece of shit product, major pain, but enough that basically I can see that starting to happen, and I'm like, oh, bricks, money.
Let's take a
great.
final question.
I love it.
Thank you.
Good question, by the way.
So lots of problems to be solved in the world. Some of the bigger ones, healthcare, education, seem to scare investors because regulation, complexity, and all that. How and what do you think we need to do to break through that fear?
Arlan or Ben, you want to take it?
You know, sort of the same thing I said with how glad I am that you have the opportunity to show success to the person that laughed at you. Nothing succeeds like success. It's the best revenge. So investors don't like, well, look, so NEA, half of the team in the Menlo Park office is medtech. They do biopharma, they do medtech. It's a phenomenal team. Just really, really impressive people. So there are people that invest in that category. NEA funded Coursera in the education space. In my own personal experience, I've only made one medtech investment, which was Omada Health, which has done very, very well, but I'm not qualified to make decisions on that category. And the one education company I funded was one of the longest and hardest slogs I've ever been through. The reason investors are fearful is all the friction. So there's one thing investors love and there's one thing they hate, universally. They love velocity, they hate friction. And friction reduces velocity. So both of those industries have those sort of things. So sometimes the right answer to your question is, how do you find a legal, appropriate, moral, and ethical hack to bypass the friction? You know, like when Omada Health pitched me, for those of you who don't know, it is a company where basically if you're diagnosed as being pre-diabetic, you can pay $500 a month and they'll keep you from becoming diabetic using best practices in digital intervention and all this sort of stuff. And they're doing a tremendous business right now. They've raised like 4 rounds. And I was like, well, yeah, why would people pay for that? Like, it's like a health club membership that costs me $500 a month that I'm not going to use anyway, and all I have to do is read a magazine article and see that if I move more and eat less, I'll actually not tip over. But then I realized that the people they were selling were the self-insured. Top 1,000 companies in this country are self-insured, and I was like, oh my God, light bulb, here's money. So their hack was to have a solution that was medtech enabled, but to go to the self-insured to empower it because it costs $2,500 a person to have somebody that's diabetic on your payroll. So $500 is a really great deal. So I thought that was elegant and a nice way to figure it out. And that eliminated for me all the fears of, oh my God, there's FDA this and there's all these things. So, you know, you just have to find a way. Every entrepreneur has to find a way. I would argue it should be legal, it should be ethical, it should be moral, because you wake up every morning and look in the mirror, you want to be happy with who you are, and some people can survive without those 3 realities. I can't. You know, and figure out a way to make it work without having to go through all the painful friction that it would otherwise entail.
All right, this has been an amazing panel. Let's thank Arlan, Ben, and Zach. Big round of applause. Great job. Fist bumps all around.